sentiment is low. There is liquidity problem in the market from both from the developer side because cost of debt is very high. Banks are not so eagerly lending to the industry. Private equity money has slowed down quite a bit, dried up quite a bit. I mean, we had a peak of 2007 when billions of dollars came in, and now we get $500 million to $1 billion in a year, which enters the market. From the sell side, for the consumer, mortgage interest rates are high, prices have gone up very high, and of course the sentiment is low. So the market is in that tight situation. The good part is that overall there is still movement in the market. So if you look at the commercial real estate market, we saw reduction in space take up over the years. We've seen that. However, there is still 28 to 30 million square feet which gets absorbed, which means the corporates are expanding. A lot of this is consolidation, but we are seeing at least activity in the commercial market. Yes, it is slower, and the rentals have also remained flat thanks to the supply which is there in the market. And but that has also encouraged more people to expand and consolidate or improve their real estate. So this will continue this year. Again, there will be at least initial part of the year this space take up will be slow, but at least it's happening. So it's not that the market is slow. If you look at they're dead, but if you look at the residential market, again, because prices went up really high, especially in Delhi and Mumbai, we've seen sales coming down. Overall, in the country, residential sales have come down. However, again, at the right price, at the mid-market price, where the developer has even half decent reputation, and we are seeing sales happening. If you look at the funds, overall is still peanuts compared to what our economy or the real estate market requires. Obviously, there are opportunities, and therefore the funds are happening. Two things are happening. There's one, foreign money, which is private equity coming from outside, which is limited, but some money is coming from there. The other is what we've seen over the last year or so is that domestic money is coming to real estate. So people are raising funds domestically and are not only hung up on international money. That domestic money is coming in because if you look at India, there are very limited investment opportunities. One, in liquidity is tight. On the other hand, people are sitting on cash because of the economic slowdown, because the sentiment is low. A lot of that money, there are fence sitters who are not putting in the money. Right, so it's not that there's no money in the market. So some of that money is getting diversified into real estate. So you do hear about people raising 200 crores, 500 crores real estate funds, which are really opportunistic funds because the market is slow. There are investment opportunities where, if you see in the commercial space, private equity funds like Blackstone has taken a big position. There are others who are taking rental yield basis commercial properties where there properties which are leased out, and they're doing it on yield basis. The fact is they feel it's a good time because the prices are competitive, and of course they are bullish on the long term on the market, as well as they are reducing the risk by investing in income producing assets. So less money is going to greenfield development projects, but where there is a good quality commercial space which is rented out to an A-grade tenant, then of course the risk is lower because you get returns immediately and you're buying into a project which is completed. Absolutely, REIT structure will make a big difference to our market, and I hope it comes sooner than later. What REIT will do is 2-3 things. One, it will mop up retail investments. So like people who really want to participate in real estate but do not have, because real estate is expensive, especially in India. Like I mentioned, interest rates are high, but there are people who want to participate in commercial real estate, even residential real estate, but do not have that kind of money or don't want that much exposure. So that way you buy into a REIT unit, or it's like a mutual fund once it comes in, and so like you invest in shares of different companies. REIT will allow retail investors to take exposure into real estate and into larger real estate. So for example, if it is a 1 million square feet office development or a 300,000 square feet retail development, normal retail investor would not be able to buy in there. But through a REIT structure, you can diversify into real estate and own indirectly, like you own a share in commercial or retail, or even other segments of real estate. The other bigger thing what REIT is going to do is it's going to provide exit. to people are investing in real estate market. So what is not understood is, besides people talk about retail investors participating, but the biggest advantage of having a REIT structure is it will encourage more institutions to put in money, especially both foreign and domestic, into real estate. Because if they want to sell, so today someone buys, invest in, let's say a private equity fund or anybody invests in real estate, and they hold on to the asset. So they develop a 100,000 square feet of, let's say, office space. How do they sell? So today, really, most of there are few private equity funds who they can go to. Otherwise, they sell in strata, small spaces. When a REIT structure comes in, they will be able to sell to that REIT structure. So a lot of people who want to invest in India from outside, they feel that, look, we may invest, but what is the exit? So exit is a bit of a problem. But REIT will mop up that retail money, will bring more liquidity in the market, will provide exit to a lot of the investors, and like I said, it'll encourage. Regulator bill certainly is good for the consumer, and I feel consumer needs protection. However, the regulator bill also has to take into account the developers' issues. It has to be a more balanced bill. Like I mentioned earlier, that consumer needs protection. There are cases where consumer has been taken for a ride, so regulator bill is good. Regulator bill also will give confidence to more people to invest, because they know that if something goes wrong, there is a regulator there to protect them. And both, even internationally, it will be great for people. They'll feel this security that there is law which will be implemented in case something goes wrong. So it will encourage investment. However, the problem is, regulator bill is not taking into account the problems developers face on daily basis. So if you penalize a developer for late what you call delivery of a project, but the developer does not get approvals on time from the authorities, the developer has to go through 40, 50, 60 approvals before he can finish a project. Then how can you prosecute someone where it's a lot of reasons for delivery on time is beyond his control? So I think so in conclusion, I would say that regulator bill is good. It should be there, but it should be more balanced bill,
amendments.
which should, definitely there should be amendments which should take into account all parties involved, because no point then it'll be difficult to implement, and there'll be it should not be a deterrent. It should really be for consumer protection, at the same time for encouraging more investment, giving comfort to investors that they're secure when they invest. See, industry has moved quite a bit from hardly any information available, low transparency, etc., to today. I'm not saying it's fully transparent, but there is significant improvement in transparency information. What that does is, one end, yes, the industry becomes more competitive. But if you look at any industry anywhere in the world and look at India, wherever there's competition, it improves quality and improves pricing, and also encourages more people to invest. So all these indexes, information, all now today, besides company like ours, which churns out research report, it's the banks, because thanks to listed companies, to newspapers, magazines, TV channels, I think there is a kind of an information overload right now, compared to it was zero to today. It's another extreme.
Real estate shows also coming up, and which was not there.
But this is only going to be better for the industry, because it'll encourage more people to invest in real estate. So today, if in a particular area what is the average price, it's like the stock market, where stock market people hardly used to touch. Today people are trading. The people who are investing has expanded significantly. So certainly all this information, I think, is very good for the industry, good for people who want to invest. They can take an informed decision, and this will be only is going to strengthen further. So we have only started. I think going forward there will be more. This is only going to improve.